Hello, everyone, and welcome to another episode of the Business Growth Show, where we talk about all components of business and how to utilize them for exponential growth. My name is Athin Cassiotis. I'm a business strategist where I help business owners grow and scale to create wealth and freedom. And today, I have an awesome guest. He's an entrepreneur, speaker, musician, thrill seeker, and one-of-a-kind finance consultant on a mission to shake the industry up as the director and principal advisor of Fenton Financial. He does this by empowering business owners with the skills, knowledge, and capabilities to take their personal and business finances by the balls. And he has 6 postgraduate qualifications, including a Master of Applied Finance, along with 20 plus years working in the financial markets. And he's won multiple awards and been featured in many publications. And he's raised over 1 billion USD in investment funds. And he's helped thousands of clients around the world with business, finance, and wealth management, and he makes wealth simple for business owners and professionals. Welcome, Andy Fenton, and thank you for being on my show.
Mate, great to be here.
Awesome, mate. I'm sure it's going to be a wonderful show for everyone watching and listening today. So you're a very successful entrepreneur. So for those people who don't know who you are, please introduce yourself by telling us about you and your journey.
Well, there's a long and short version. I'll give you the shortest possible version. As you were reading that out, I was kind of thinking, geez, it feels like multiple lifetimes sometimes. But mate, my journey started really at school as an entrepreneur. The short story is that we had a charity drive once upon a time at school, and I made little pikelets with that fake cream on top of it with Smarties and sold them for 25 cents, and that was for charity. And then I went out the next day, ran the store for the rest of the week, and made another, I think it was $20 or something like that. And then the teacher came and asked me about it, and she's going, "Well, that's great. You're so enthusiastic about raising money for charity. That's amazing, Andy." And and I was like, "What, charity? Hang on. No, this was all about raising money for me." So we met in the middle. I kept some, she kept some, and then it started an underground lollies activity that providing sweets to the sweet tooth of the school. But I guess that was the intro into business at a young age, and it sort of learned about economies of scale and buying in bulk, and it was a black market activity, but I guess a reasonably legal one. And but then, mate, I was a muso when I left school. It was my passion. I was very much into jazz, funk, fusion music, those sorts of things, and that led to a pretty poor existence. And when I mean poor, I mean broke. I remember one day busking on the streets trying to get fuel money just down the road in Belgrave, and also having to hitchhike to a gig with a snare drum in order to actually play. So kind of knew what it was like to be on the bones of my ass, and it was as simple as having dinner with my old man, and he had a bottle of Henschke Hill of Grace on the table and a lamb roast, and I hadn't eaten meat for God knows, probably 10 months, 12 months, and had a little bit of a cry at the table because my life wasn't necessarily going in the right direction. And the old man just said, "Well, there's all of these brochures that I just happen to have ready about all of these different finance courses." So mate, I did it because I figured, well, I'm broke as you can possibly be. I've really given it a red hot dip, but jazz music is not that popular in Australia, or certainly wasn't back then. And found a passion for exotic derivatives and bonds and treasury operations. So very quickly jumped into study, and I never stopped studying. I studied and worked full time then in the finance sector until I was about 30. Just tacked on a new degree because I wanted to learn about new things. And before you knew it, I'd gone from Macquarie out in Australia to Bank of New York in London, New York, then came back to Australia in funds management, and then into distribution of funds management. So kind of did every role from advising advisors back when I was young on investments through to mergers, acquisitions, created exotic derivatives as well once upon a time. That was fun working with all the propeller heads. But ultimately, the investment banking was probably the peak of the corporate career. And it was a bit of a soulless activity. You know, it didn't feel like you were contributing to the world in any meaningful way. And there were a number of things that happened in life that made me reflect on what I was doing, including my wife passing away when I was 30. And that kind of gives you, well, it's an extraordinarily difficult thing to live through, but it gives you a perspective on life. And one of the great lessons and things that, you know, you look for the good in situations, no matter what they can be. And if there was anything good that came from the situation, it was that made me reflect on, you know, how I was spending my life. Because, you know, for those people who can't be here, you know, I think that my perspective is that, you know, it's our duty to live the best possible life that we can. And that wasn't in finance back then, because I felt like I was destroying things and making a lot of money for shareholders, but not doing good for your average Joe. And that led to the entrepreneur's career. I connected with a bloke called Kerwin. We did some work together. We still do work together today. He's an amazing human being. Taught me a lot about business at the small business scale. And I started up a kite surfing tour company, then had a marketing company, then got back into finance, but helping small to medium business owners with the knowledge that I'd kind of gained at the very highest levels. And I became quite passionate about helping small to medium business owners because, well, you're one, I'm one. I thought it would be easy in comparison to, you know, the investment banking and funds management game. It's fucking not. It's tough. And, you know, got to know a lot of business owners that really struggled and had poured their blood, sweat and tears into business over a lifetime, and then had nothing to show for it. And then, you know, had contributed a lot to people in salaries and contributed a lot to the world, but ultimately didn't reap the rewards of it. And I really wanted to come in and change that. And that's what we do now. We work with small to medium business owners. We assist them in understanding structures, how the game of business works from a cash flow structure perspective, but then also how to take money off the table systematically over time to make sure that if the business fails, or the business, you know, you exit it at some point in time, that you've got wealth that is commensurate of the kind of energy that you put into it over time. And that's what we do today. And that's what we're very proud to do today.
Yeah, awesome, mate. What a story. Extremely powerful, from those interesting, humble beginnings to what you've done, and also, mate, testament to yourself to where you are and what you're still creating to this day. And you know, firstly, I'd like to ask you mentioned about
if I'd known you were going to ask the question, I probably would have tried to find one of the old hippie photos, mate. I used to have hair down to here, and it was peroxide blondes because somebody decided to dye it when we'd had a few drinks, and I couldn't afford to do anything about it. So it was normal color to here, and then peroxide blondes are there. It was, yeah, I was a very, very different person. I think I've been a few different people over the times of my life.
Yeah, I've been there as well, Andy. I think when I was 18 years old, we went through a craze where we had hairdressers as friends, and we all grew our hair. We had straighteners, like, you know, GHD straighteners, and we're having different colors in them. And so I had a fringe and everything like that. I've lost a bit of that, as you can tell now, but fun times while it lasted as well.
Yeah, well, mine's almost going back to the peroxide in the grey way, but mate, yeah, you remember the days. It wasn't as bad as the 80s. Let's just say that.
That's it. Love it, mate. We can always look back and have a bit of a laugh. So, you know, I think, you know, one of the big things you said there were about the challenges, right? That you came, and a lot of business owners, you said, you know, are struggling. And sometimes it can be around the way they think about things, around, you know, finances and wealth, especially. So, you know, firstly, what are some, you know, misconceptions or, you know, limiting beliefs, is, you know, a better way of putting it, around wealth, which, you know, may be impacting, right, you know, business owners or people to grow their wealth, and how, you know, what tips or how can you help, you know, with your clients to overcome that element as well?
Huge question. Like there's multiple layers. So, you know, guide me with where you want to go with it, because it's a huge question. I think looking backwards, if we go to the end of somebody's journey in business, and we look at that stage and the lessons and the mistakes that a lot of people have made and still make today, a lot of people kind of have their business and they believe that it's an asset. And so they believe that if they run it their whole life, then they'll be able to sell it for something considerable. And a lot of people go, my business is my super. Bullshit. It's an absolute flawed belief. It's not. And if it is, if it's going to be your super, then I think it's important for people to understand the statistics. Now, do you want me to share them or not? Because it might freak a few people out.
Mate, share it, mate. Everyone needs to know the true reality of the situation.
Well, so out of 28 million firms that start up a year, now the Australian statistics are really close to this. These are the American statistics, but the statistics are very, very close. It's just America is a much larger sample set, but the percentages are still pretty much there. So out of 28 million firms in the US every single year, there's only 4% of those firms that actually make it over $1 million. Right now, 0.4% of them make it over 10 million. And then the numbers get very, very scarce, above about 20. So if you're a betting person, they're not the kind of odds that you want, right? You're not going to go to a racetrack and drop $1,000 on that unless you've got multiple thousands of dollars to lose that day at the racetrack on those kind of odds, or unless you're drunk, I guess. But ultimately, like, they're not good odds. And so business owners kind of need to understand first that business is a challenging sport. It's a brutal sport. It's a blood sport. It takes no prisoners and nobody gives a shit about you, unfortunately. But you have to give a shit about everybody around you. So it's tough. I guess that's kind of my rub. And so if you use that statistic and you go, well, my business is going to be my super, then on the statistic side of the equation, you've got 4% chance of being able to convert that, or 0.4% chance. So statistically, not a smart investment, if that makes sense. And I love the numbers. And everyone says, no, that's not me. But the statistics don't lie, right? Now, if people are listening to this, then they're more likely to be part of the 4% and the 0.4%. Because the other reality is that very few business owners actually spend time on education. And it's so critically important because ultimately in business, and I think Jocko Willink said it best, everything's your fault. Like, you don't get to pass the buck to anyone. If the ATO comes knocking, you can't say, oh, my bookkeeper messed it up. Sorry. No, the ATO go, I don't care. Like, give me the money. And, employees, if you don't have enough money to pay them in the bank account at the end of the month, do you think that they're going to go, oh, no, don't worry about it, just make it up next month? No, like, the buck stops with you ultimately. So, understanding that, you're ultimately responsible for everything in the game, it means that you need to educate yourself. And you need to, one of the biggest limiting factors that business owners face, and I kind of laugh, but I don't laugh at people. It's sort of comical in a way, but it's also quite sad, is that business owners quite often succeed by luck because they've got a great product, or they're just determined, and they're just, they wade through seas of shit and mud and come out the other side still smiling. And then have their friends go, geez, it would be nice to be in your position. And you're kind of like, do you know what I've just been through in the last month? And they have no idea on their metrics and their numbers. And they say, and more often than not, you've probably heard it yourself, I'm just not a numbers person. And you got to be, like, 100%. You got to know your numbers in business. Like, you need to know your cash flow. You need to know your tax. You need to forecast. You need to educate yourself so that you can protect yourself against bookkeepers, accountants, and, advisors out there, because they're there to help you. But quite often, if you've got an accountant, an advisor, a mortgage broker, then they may take you in different directions with different strategies, because if they're not communicating with each other, they're expecting you to manage and master your strategy. And if you don't know how to do that, then it can be a very, very fast path to not having any money and taking some people down with you along the way. Because the other thing in business is that we can, really hurt people on the way through. So business owners, no matter who you are, if you want to succeed in it, you got to start to learn to love your numbers. And then ultimately, once you understand the numbers, then it's a conversation about, well, how do you grow, scale, and how do you then take money off the table and turn that money into assets and wealth for you personally, so that you don't end up with a business that's earning revenue that you can't sell, but you can't, or you don't have the energy to manage anymore. Does that make sense? It's a big question, so it's a big answer.
Definitely, mate. It was a very powerful answer, and I love the way you framed that. And you're right; it's so powerful. And this is for the right brain people, especially, which are not necessarily the logical people. You got to learn it, and you can. And I'll just add that I'm more left brain with the numbers. My wife isn't, but I taught my wife how to learn the numbers, and now she loves them to an extent, knows them well enough to help her, within a business. So anyone can do it. I'll just confirm that.
100%. Like it's basic math, right? It's really basic. It's add and subtract. It's just the sequence and order that this happens. And the challenge is, and I actually think that it's an epigenetic coding. And for those who don't understand epigenetics, the quick framing around it is that a woman is born with all of the eggs that she will ever produce in her lifetime. And so those eggs are stored with the DNA of her mother, because she was in her mother's womb as those eggs were being, developed within the body. So we also understand that within DNA and within the cells, there's actually coding, and that coding and that neural tissue actually brings down past experiences, brings down past thoughts, traits, habits, so on and so forth. Now, there's different schools of thoughts on this as well, and probably have some people going, that's garbage, and some people going, it's 100% right. Choose whatever you want to believe, but look at your family and see how consistent people turn out to be what they say they never will. But ultimately, when it comes to finance, legal structures, money structures, tax, especially for us, like we're based on the Anglo system, right? So these, back in the day of King Henry, and the taxes and the laws that were brought in into play were there to intimidate and keep people poor and make the rich rich. And they were specifically designed to be complex enough, and so that only a few people really understood them. And so then, if you look at that lineage of knowledge over time, numbers are scary. Tax is scary, because what happens when you don't pay your taxes? Well, you get your head cut off. Now, that sort of coding, and I'm being profound for effect, but there's a lot of truth to it. Right. And some people who'll be listening to this will already be feeling it. And I'm like, oh my God, that feels exactly like that. Now, whenever the tax bill comes around, it feels like I've had my head chopped off. But we have that coding in us, which means that we're already pre-wired to be scared of it, pre-wired to potentially move away from it and believe that it's complex. But it's actually not. Like, legal documents now are written in plain English. If you can read a book, then you can read your trust deed, right? And if it's not, get a different one. Like, literally plain English. Go to Clear Docs, have a look at it. One of the first things that it says is written in plain English so people can understand it. So if you've got a trust deed that says, our for out, thou, or whatever, and it looks like a Shakespearean playwright, get a different one. Like, get something that you can understand, and then spend the time to read it. Like, it's not a Dan Brown novel, right? It's not. But just take the chance and take the time to read the documents that you have, so that you understand the rules by which you're playing. But most business owners stick their head in the sand. And so from an accounting perspective, then we've got all of this jargon. But ultimately, if you can just condense it down and simplify how we think about it, as far as, money in, money out, money left over, that has taxable portions. Persons pay, part of it is what they get, part of it is what we pay tax on, part of it is super. Liabilities. So it's about reframing, the context, and not leaving accounting meetings going, I have no idea what fucking happened. And I reckon 80% of the people listening, if not 100%, if I ask the question, have you left a meeting with your accountant and you've thought, I have absolutely no idea what happened, but I just didn't want to sound like an idiot? well, you're an idiot for not asking further questions, because ultimately that's what you got to understand in order to master the business game. And you do. And if you think that somebody else is going to come and save you, you're wrong. It's just not going to happen. You've got to do the work.
Yeah, I love that, Andy. And just to get people from my perspective, right? Like I've done an MBA, so I've got a bit more a knowledge around that time. And when I go in to see my accountant, I actually have my strategy in mind, saying, "Hey, I'm thinking about doing A, B, C, D, E. What are your thoughts around that?" I'm preempting this, and I'm asking additional questions to understand more about the accounting process. And the more questions I ask, the more my knowledge gets bigger. So it's a very high level conversation when I go into those. So that's the lens that I'd be recommending, like what Andy's saying, is be curious, like ask more questions so you understand it. And especially like you mentioned there, Andy, about the structures, right? Because I think financial structures is a big one for people. We've got, sole traders, a lot of risk in that, to companies, to trusts, right? And then you've got other areas, not just for business structures, but then, structures for wealth creation, as well with our family. So do you want to just touch on a bit about structures? Because you touched on it a little bit there, more about some tips or things that people should know and think about or look into so that they structure their business and their investments, better, correctly.
Yeah, another massive question. I mean, any of these questions we could spend a couple of hours on, and sort of do. But just to go back to the accounting one, there's a much simpler question that you can ask the accountant when you don't understand something, and it's simply, why is that? And just keep going, why is that? Why is that? Why is that? Until you get to a level of understanding. Because a lot of people who are probably watching this don't have an MBA. Like I do have multiple masters, but I'm dyslexic as well. And it took me a huge amount of time to get through that. When it goes in, it goes in, but I'm not naturally intellectual type of a personality. It was, hard fought. I just happened to love certain parts of it, which helped me, focus. But just asking the question why is super, super powerful, and just don't leave until you understand it. And if you don't, go to somebody else, find a new accountant, find a new bookkeeper who can communicate with you. Because the other thing is, like, did you marry the first person that you ever dated?
No.
How many of you on this call or in this podcast, married the first accountant that you dated, or the first advisor? Right? We should find the right fit, because ultimately this is going to be a marriage for a long time. Anyway, I'll get off that soapbox and onto a different one. Structures, huge question. And we kind of could go anywhere with regards to it. I think most people really need to understand, again, their structures, which means read the deed and read the Constitution. It's not fun. It's not scintillating reading. But you know what? It's the rule book by which you play the game. I think that for most people, once they know that their business trajectory is going to be growing in the right direction, then at bare minimum you should be operating as a company. If you operate as a sole trader, or as a partnership as sole traders, then it's like you're naked out in the middle of the Amazon, right? Like everything can kill you and will wipe you out. You're just way too exposed. And it's a really dangerous game to play, not just for you, but for your team. Because here's the thing is, as people, and I know that everyone likes to think that they're a unique flower, but you're not in this game. Everybody is exactly the same. And as far as people are concerned, we're structures. Like if you look at the game that we play, and those people who dive down the constitutional conspiracy theories and stuff like that will be going, I know what you're talking about. I'm not actually talking about that, but it's kind of in line with it. But we are a structure. We can sue, we can be sued, and we can pay tax. And that's the right that we get as a structure. So me, Andy Fenton, I am like a financial structure. I am like a company, right? I have attributes of a financial structure, and that's how we operate. So, we're not unique flowers. We are structures. So we can be sued, we can sue, and we can pay tax. That's the benefit that we get through being a structure. So the way that we can protect ourselves is by putting a wrapper over the top of us. Sorry, mate, give me 2 secs.
Well, good, mate. Do what you got to
Siri
do.
just went nuts on my computer. So as structures, as structures go, you know, you've got companies, you've got trusts, you've got trading trusts. And with business, the best advice that I can give somebody when it comes to structures is start with the end in mind. So even if the destination at the end is significantly different to what you thought it was at the beginning, if you start with the journey in mind, you will most likely put yourself into a better structure. And what I mean by that is, you know, if you don't have a family right now, but you will likely have a family into the future, and that's something that's on the cards, then you may want to think about not just having a company, so a proprietary limited company to trade out of. You might want to think of getting the trust to own the shares of that company straight away, right? Mostly because you want to then protect or add a further layer of protection for your family, for your future family. Hell, if you have kids that are going to start to get through to their adult years, then there's distributions that you can potentially make. If you've got the Brady Bunch, then it's even more beneficial to have, you know, the structure in place, because you can minimize your tax further. If you want to get into the specifics of it, we can get quite specific here. I think the biggest challenge when it comes to structures is your average accountant doesn't understand them well. Your average lawyer doesn't understand how to implement them into business. And it's probably one of the most tricky things to navigate when you're starting out in business. The challenge is that if you mismanage it when you're starting out, it causes problems down the track. So it's good to chat with business owners about it. And if you don't have the right connections, then you've really got to spend some time understanding the foundational structures. And the core ones to understand is a proprietary limited company and a discretionary trust, which is often called, you know, a family trust. And if you can learn how those two vehicles operate at a reasonable level, you'll be light years in front of other people, because structures are ultimately the game that you play down the track. So once you've made your first million, you're going into, you know, 2, 3, 4, and you're starting to be able to generate some real revenue. And for most businesses, you know, once it's a hard slog to $1 million, right? It's a hard slog. And unless you've got a business that has very low overheads, right? Most businesses EBIT, so your net profit, so income minus the expenses to produce the product, minus the expenses to keep the lights on and the rent and the salaries paid. Once you take all that into consideration, you know, a 20 to 30% net profit is very, very good, right? So on $1 million, that's, you know, 300,000. Now you've got to leave 100,000 of that in the business. So if you're earning $1 million, then potentially you could take 200,000 off the table, right? But if you want to scale, you've got to keep reinvesting. So to get to $1 million is quite challenging. And for most businesses, there's not a lot left over. You reach the economy of scale around $1 million, $2 million, depending on the business, right? But once you start to generate those types of incomes, you need to be able to funnel them through structures to minimize your tax. And we call it the game of 30. And so at any point in time, if you're paying more than 30% tax in a single entity, being yourself, right? And at the moment, 180,000 works out to be about 30% tax. So if you'll be paying 42% on the top range, but if you average that tax rate across your whole salary, it's 30, right? If it's a non-trading company, it's 30. If it's a trading company, it's 25%. If it's superannuation, it's 15. And so I kind of draw a triangle whenever I'm sitting down with my accountant, and it's like, okay, so there's personal, there's super, and there's business structures or companies, right? Where are we distributing and how much is going where? And we play the game of 30. And at any point in time, if one of those structures is breaching 30, which is ultimately it's going to be distributions to you personally, well, we go, okay, well, do we want to pay that extra tax? And if we do, what's the reason for us paying that extra tax? And if there's no reason, then we'll funnel that back into a lower tax entity, right? And then you can start to look at wealth creation strategies with those entities, with yourself. and now we're sort of getting into the, you know, the wealth planning side of it and the cash flow management side of it, which then goes into one of the next big mistakes that business owners make. And not sure if you're going there, but one of the biggest mistakes big business owners make is that as they start to accumulate more money and they start to become more successful, they have more successful cars, and they have more successful bottles of wine, and they have more dinners out, and they go to more exotic destinations. Now, great, it's good to have reward, but understand that the money that you take off the table today is robbing you from the future that you potentially want tomorrow. Now, if you're a carpe diem type of person, seize the day, and you don't care about the future, then, you know, potentially wealth creation is something that's just going to happen by chance. And if you don't get there, well, you just have to wear the ramifications. But ultimately, you know, when people start to play this game, it's wise to systematically take it off the table. And even if it's like, well, half the dinners and the other half goes into investment, but I'm kind of banging on a different drum.
Yeah, awesome, mate. That was really powerful on what you shared there on the structures. So, excuse me. And I think, yeah, find the right people that understand this, as Andy said, and speak to other people, and then get them organized so you can do that. I love that. Let's go a little bit more specifically about business here, because I know you got a lot of knowledge around this area. So if you're looking at a business, how do you determine like the financial health of the business? And if we get a bit more specific, what are some of the key metrics that you choose to make sure that, you know, that business is being successful and driving, you know, that wealth strategy?
You meaning from a consulting perspective? So coming in and saying, okay, you know, how healthy is the business? Say I'm coming to you and I'm looking at your business, or are you just saying if I'm looking at profit and losses in isolation of the conversation?
Yeah, I would say a little bit of both, going into the business first, which then goes into the bigger aspect later.
Right. Well, the first is the conversation with the person. And so the financial health will be dictated by luck if this first part goes wrong. And it would be typically like, so how often do you look at your financials? That would be the first question I'd ask. And you would say,
yeah, whatever. Like if some people might say monthly, some people might say weekly, right? There, or if they might say like rarely, every quarter or something.
Right. So if they say rarely, and most people say, I look at my financials at tax time.
Once a year.
Right. So, and not only is it once a year, it's when you can't do anything about it, because it's after 30 June when most people look at their financial statements, and that's historical. That's talking about the year that was. You can't do anything. So typically if somebody says that to me, I go, okay, the financials are in bad shape. So there's probably a lot of people listening to this going, shit, we're in bad shape. And so that means you succeed by luck, right? Luck and determination, and but mostly just luck and determination, right? And that's fine. So the next layer is for people, what you want to be getting people to is you want to be looking at your numbers every single month, right? And for some people, they should be looking at it every single week, at a minimum every single month. And what you should be looking at is your profit and loss and your balance sheet as the key items. But ultimately, you know, what I get business owners to do if they don't know their numbers well is I get them to actually put every single income and every single expense into a spreadsheet. And this is the best way to learn how the game operates. A few different reasons behind it is firstly, you feel every expense. So when you're going through your statements, and I've done it many times myself, whenever our business gets a little bit out of whack for whatever reason, I'm like, oh, okay, it just doesn't feel right. I feel like we should be more profitable than what we are. I'll always go back, and for 3 months, I'll literally do it every single expense, which is a nightmare. It's not fun. I literally sit there with bank statements, printing them out, go through every single line item, rule through it, put it on the spreadsheet where it needs to be. Typically, when we do that, we end up cutting our expenses by about 20% because we find shit in there that shouldn't be there. And it's a direct debit that's been there and it's just been there forever and a day of a software that you don't use or whatever the case may be. But then you actually feel every expense. And that's kind of important because in a society now where, gosh, we don't even have to tap these things anymore. Like we don't even have to tap these cards anymore. We can tap our watches. So our relationship with money is very, very different. Like it used to be, somebody would come along and go, all right, so how much do you need? All right. And you'd count through your cash and you'd hand it over, and you'd hand over one of these, you'd hand over a 50, and then somebody would give you back this. And immediately, by the different color, the different size of the notes, you understand the concept of exchange, right? And that's why I always keep money in my wallet, is not because it really ever gets spent, but it's kind of like a reminder to me about the value of what we're, tapping away. So our relationship with the transaction is more distant than ever because we just go bang, bang on our watch, tap, go. Most people, well, I watch it all the time, mate. People don't even look at the receipts. It's like, watch this at a petrol station or just anywhere, at the tennis or at the cricket or at the football. You watch, people just go bang, don't even look and go. Now, they could have been charged for 4 more drinks than they bought. They could have been charged for an extra pie, whatever the case may be. That's our relationship with money now. Like whereas previously you'd hand over a 50, you'd get your change back and you'd quickly count it. You remember that?
Yeah.
You get it back, you'd look at the coins in your hand and you'd do quick math on what was left. So understanding that we've got this very tap and go transactional kind of mindset to money these days means that feeling the transactions as a business owner is really important, because you then start to go, well, is this expense necessary? But it also teaches you how a profit and loss works, right? Because you go through that and you enter in all of your income. It's like, yeah, the income's in. Then you put your costs of goods in. It's like, ooh. Then you put your expenses in. You're like, oh. And then you're looking at the bottom and you're going, well, hang on. At the bottom of this, it says, $10,000. There's only $2,000 in my bank account. What's the difference? And that teaches you the relationship of the profit and loss to the balance sheet. And so that's where we look to understand where a business is actually traveling. You've got to make sure that the numbers are right going in. And so doing that at least helps you know that the numbers are right and gives you a feel for where the business sits. And ultimately, whether you're a bookkeeper or an accountant are actually doing a reasonable job and not fudging the numbers. And I don't mean intentionally, I mean just unintentionally through, poor management. So looking at the profit and loss, and typically with businesses, I want to see minimum of 8% EBIT or more. And then we ask the question, well, what are you drawing from your business personally? What are you living on? And it's another big question that most business owners cannot answer. And it's like, well, I just tap it and go. Yeah, I know you do, but how much does it cost for you to live? And most people don't know that. Right. And because what they don't do is they don't take money systematically off the table for themselves as a wage. Now, when I say wage, I don't necessarily mean it has to be a salary that is registered as a salary. It could be drawings, it could be distributions, it could be dividends. Right. But systematically taking money off the table every single week so that your lifestyle exists within the amount that you give it. And I've got an expression that is money is a gas, or money's like a gas. It expands to fill the room that it's given, right? And it's typical. You do this, I do it with me, and it happens all the time, right? I have one account, and it just siphons off X amount of dollars per week, right? And it's only small. It's like $50, right? Now that's that sort of cash account, and I can do whatever the hell I want with it. And I forget about it because I don't spend a lot of money, and it goes, and then I'll look at it. I go, oh my God, there's like $500 in there. Do you know what happens to it? It vanishes. Yeah. Like overnight, it's just gone. And I'll look at it a couple of weeks later, like, Jesus, that just disappeared. Where did it go? And it's on nothing. Like it's really on nothing. So it tells us a little bit about our psychology to seeing these things. So paying yourself a reasonable wage is so critically important because at least it defines how much you need to live. And then helps you to operate within that bounds. It puts some container around that gas. So it means that you're confining it, you're putting some boundaries around it, and money loves structure and boundaries. And so once you start doing that, then you stop robbing from the business. So it's a long-winded way of saying the next area of the balance sheet, the profit and loss that I look for, which is actually on the balance sheet, is then director's drawings. So drawings are the things that when you go and use your work credit card and you tap it at Vue de Monde, or you go to the Opera House that's in the background there, or you buy a ticket on the Queen Mary and go for a pleasure cruise, that money is not a tax deduction. So that you're spending the company's money, and later on, the accountants will figure out how much tax you need to pay on that. And that is really crucial mistake that business owners make, because then you play this game that snowballs, and it's a game of catch up, because more money as you become more successful, more trips, more tapping of the card, which means that you're spending more, your lifestyle becomes more grand as far as the money that you spend on it, and you're constantly paying catch up on the tax that you have already realized in the year that you've spent it, but you don't pay it until the following year. So building some boundaries, that's the second area I'll look. So I go on the profit and loss, where's your salary? Where's your wage? Where's the money that you take off the table first for your lifestyle? And if that doesn't exist, that tells me that the health of the business is potentially shaky, right? And they're going to be playing this game of catch up. And typically I go, what car did you drive when you started the business? Okay, how much money were you making when you started the business? What car do you drive now? And the answer to that question 9 times out of 10 tells me their relationship with money.
Yeah. Awesome, mate. I love that. Very powerful instinct, and how to review those. That was, I'm sure everybody hopefully has noted that and, written notes, because what Andy just shared with us was really powerful about your understanding of money and the differences between the profit and loss and the balance sheet and how you can grow the business. I love that, mate. And it's been a very value-packed session today. It's been really powerful. And as we're wrapping up today, I'd love to ask you just what's one key piece of advice would you like to give to all of the entrepreneurs watching and listening today?
Oh, one.
It might be hard just to pick one, right? Whatever comes.
Play the game like everything's your fault. Right? And understand that the buck stops with you with everything. And ultimately that numbers are the lifeblood of your business. Cash flow numbers are the lifeblood of your business. And they're controlled by your profit and loss, your balance sheet, and your cash flow statement. And they operate within your structures. So if you want to attract more money, learn about your financial statements and structures. It mightn't be the most tasty course that you taste at a restaurant, but over a lifetime, that knowledge will pay dividends far more and protect you far more than any other piece of advice I can give you. I know that it's shit, because it's like you have to go and do the work, and you potentially having to learn about stuff that you've got a historical epigenetic coding that is driving you away from it. But if you know that everything is your fault and the buck stops with you, then hopefully that'll inspire you to learn about structures, learn about your statements, and how to manage them. And if you can do that, you'll become what we call in some of our business operations, which is weapons of wealth. And I reckon everyone should go back and watch Kerry Packer's House of Reps inquiry of 1991, because what he said back then is still true today. And ultimately, if you watch that, if you learn about your structures, you learn about your financials, then you'll follow the rule. And one of my favorite sayings that he says is, I'm not avoiding tax, I'm minimizing tax. And every Australian should minimize their tax. And if they don't, they need their head read, because quite frankly, as a government, you don't spend it that wisely that we should be donating extra. So don't donate any extra.
Yeah, love it, mate. Great knowledge there, and extra tips that everyone should be following. And yeah, we connected through our networks where I learned about your awesome journey from, initially being an investment advisor to now being the managing director of Fenton Financial. You're an awesome guy, very genuine, and I'm sure you'll continue to make, wealth simple for business owners and professionals. And I'm very grateful that we connected, and I look forward to working with you. So Andy, how can people find you and get in contact with you?
Mate, just seek us out, Fenton Financial. Come and have a look at the Facebook page. We're always dropping, we do Wealth, Wine and Wisdom every Friday night. where myself and a good colleague of mine, who's probably the foremost property expert that I've known, and makes more of the right predictions than I've ever seen before. He's like the opposite of an economist. He actually makes predictions that come true, which is quite incredible. So come and hang out with us, Wealth, Wine and Wisdom on a Friday night, and that's through Fenton Financial Facebook page. And mate, and feel free to reach out through any of the mechanisms where you can find us anywhere on the World Wide Web these days. So don't be afraid to reach out.
Yeah, awesome, guys. Definitely check out Andy Fenton Financial, and all of those series that he's doing is providing huge amounts of value outside of this podcast, which is also done today. And I want to thank everybody for watching and listening to this show where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Athin Cassiotis, or visit my website, athincassiotis.com. And if you want to grow and scale your business, you can reach out to me on any platform to see if we're a good fit. And I completely agree with you, or do I? The only way we know is if you tune in next time. And when my throat gets better, we'll get a bit better then as well. And until next time, remember that our business grows when we learn skills and take action using them in spite of fear. So remember to design your growth and results.